All right, welcome into Market Day Report. I'm still Scott Shelly, otherwise known as the Cow Guy. Thank you very much for tuning us in. Appreciate that. Why don't you get to the, well, why don't we get to the prices? Because that's really what you want to see. You don't want to hear me talk anymore. Let's to bring up that corn. I have to punch on that little button, and it all kind of comes together. It usually does. Technology is great until it's not. But we do have a little bit of a higher board here today, but we're not really convicted. That's the word I'm looking for, right? July is up 3 1/4 cents in the corn. 558.5 is last, 7 cents from the lows. Well off the highs by about 13 cents. So we're towards the middle of the day, middle of the range. Deese is up 1 3/4 cents to 502.5, but we're slipping back to that $5 level, which you don't want to see. But still, we're again a penny to 3 1/4 cents higher across the board when it comes to corn. Soybeans, however, are not higher; they're lower, 15 1/4 cents lower in that July. Really having a hard time having any of the bulls step up to the plate in any of these products. Really, 13.18 is last there in July. Beans. Novi new crop, 6 cents lower there at 11.81, and that's only what? About a penny and a half off the lows. So that'll give you an idea about how it's trading weak right now. Let's take a look at wheat in Chicago. That's off between, I don't know, 2.5 to 4 cents across the board. We lose more real estate as we go out the deferreds. July's down 2 1/4 cents to 609.5. And as you get out the deferreds, let's go all the way out to March. That's down 3 1/4 cents to 654 1/4. From Chicago, let's go to Kansas City. We'll take a quick peek at the hard red there. 23 cents lower, 23 1/4 cents lower in July, and that's up front. 833 3/4 is last. Well, March is down 17 3/4 cents to 805 1/4. There you go. Moving from Kansas City, we go to Minneapolis. 12 3/4 cents lower in that front month, July. 815 3/4 is last. We got Deese off 11 3/4 cents to 821 1/4. And then finally, let's take a quick peek at cotton. We'll get to our next guest analyst. Cotton's very, very quiet, up 12 points in the front. That's July. 86.78 is last. Deese is up 15 points right behind it to 83.87. Let's bring in Todd Bubba Horowitz. He's coming to us from Las Vegas. Todd, thanks for coming on the show. I did the radio spot this morning at 7:30 Central. And we were higher, but I had to put the caveat in there that things could change quickly, and they have. It's just not really we're not giving the bulls anything to rush in and buy here.
No, Scott, it's really an ugly picture, and good morning to you. It's, listen, the fact that wheat was higher and beans were higher and corn was up. Corn was up about 15 cents at one time, and they're now threatening to end up getting lower on the day before it's over. I'm not saying it's going to get there, but the whole picture is ugly. You had Chair Powell come out this morning and talk about that they're going to continue to hike rates. Many farmers, especially if you're a smaller farmer, your inputs are more than your output is right now, or getting close. And the nastiest word of all deflations is deflation, which is really a major concern here. So the picture, unfortunately, I know it's Friday. I hate to ruin the weekend, but it doesn't look real good. I hope everybody's hedged.
Okay, so what do they do if they're not? I mean, I'm sure you're getting those. Well, I don't know if you're getting those calls or not, but I mean, I know a lot of folks have been left the horse left the barn before they got a lot of their hedges on. We have about 45 seconds. What do you think you should do? What do producers do now that you're facing such low prices? I mean, are we putting on combos here, buying puts, selling calls?
I think you're still doing a normal hedge. You have to leave the upside open. I mean, I still believe that there's a chance for a pick market this year. We're going through the very worst of it right now. And I don't know what's going to happen from here and the final pressure, but certainly if we go back to $4 corn, you want to make sure you collect at $5, not at $4. And I think that you can leave the upside wide open while still being hedged to the downside.
And then if you're leaving the upside wide open, I mean, what do you think the possibilities for corn could be to the upside then? And what are your thoughts?
Well, obviously a lot depends on interest rates and the economy and what's going on and who's going to plant and how the weather's going to be. Certainly, we could go a lot higher. We just came a lot lower. I mean, we basically almost halved we've halved our prices in wheat already. So, I mean, how much lower can you go? Well, we don't know, but you and I know there's an old saying on the trading floor, low prices cure low prices, and at some point they're going to find some buyers.
Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's with Bubba Trading in Las Vegas. We'll be right back after this. All right, welcome back to Market Day Report. Let's talk about the livestock. That's going to be something else that moves. But you know what? We've been kind of quiet here today, except for one of the products. Let's take a look at live cattle. That one hasn't really moved a lot. We've got a front month, June, up 12 cents. We like to see the up arrows, right? 165.65 is last there. As we go out the deferreds, we gain a little bit, right? We're 65 cents higher in the October. 168.40 in October. That's not a bad board, but I'm going to call it steady better. How about the feeder cattle? Feeder cattle are also steady better, and they have not done very much considering the price of them. August is up 35 cents to 234.85. October is up 35 cents to 239.12. So both live cattle and feeder cattle just slightly better, steady better. Not a lot of interest. Those quiet markets tend to kind of gravitate higher. This is where we're kind of seeing the losses. We've got lean hogs down again today, folks. June, $2.22 lower. That's 83.07 is last in the June, and that's only 3 ticks, 7 cents off of the lows. We go out to October, it's $1.77 lower to 74.12, and that's a dime off the lows out in October. Let's bring back in our guest analyst, Todd Horowitz. He's with Bubba Trading in Las Vegas. We've got 60 seconds, Todd. What are your thoughts?
Well, I think cattle is going to continue to hold. I mean, obviously, with the shortage of cattle, we're going to hold. I think that the curious part is hogs continue to get hammered. I expect to see a little bounce from them, but I don't know that they're going to be able to break to the upside. Apparently, consumers are buying poultry now. They're down to the next level of proteins because certainly they're not buying hogs, and because of the shortage in cattle remains steady. I don't see a great picture here right now. This is another little bit of ugliness. Now, hopefully, some of the other commodities are starting to break out. Maybe these will eventually join in with them.
Yeah, it's been tough, and it's been nice to see a little bit of a pullback in the cattle market, but because it makes you feel like then the rally can continue. But don't you think that sometimes these rallies, true bull markets, make it hard to stay on the whole time?
They do, but this, I think, again, you have a shortage, so we have a real reason to see higher or flat beef prices. Hogs have no excuse to be this low, especially coming into barbecuing season. So
right.
There's a lot of confusion right here. I know we got to go, so thanks so much. Have a great weekend.
You got good timing. They're telling me to rap in my ear. Okay. Thanks very much, Todd Horowitz, Bubba Horowitz from Bubba Trading in Las Vegas.